Hi traders, welcome back to another YouTube video. So in the previous video, I talked about the importance of being patient and how money is actually made by sitting, not trading. So in this particular video, I want to basically just talk about the power of maximizing your profit and the power of scaling out. Because most traders, of course, across a lot of traders that I've coached, most of them are still using a static, either it hits my target or not. And that's what we call a set and forget approach, which I think that is sometimes slightly irrational. Why is it irrational? Is if you think in terms of the logic, if you are being very rigid and being very strict with your entry level, that's fine, because you have a set of rules, a predetermined set of discipline that you have to follow, or maybe a checklist before you pull on the trade. That's why you have the entry level set there, or maybe you have a sell limit, a buy limit, a stop order, whatsoever, to make sure you only get in at the best price possible. But when it comes to exit, things are slightly different. If you are being way too greedy on your exit, you might find yourself getting into a situation where price almost tap your target, then reverse all the way to your break-even point or stop loss. So let me know in the comment section below if you have ever encountered a situation where price nearly hit your target. You are being so focused, so fixated on that specific level up until where price starts chugging back to entry, you just let your unrealized P&L run. And what happened? Market eventually moved to your break-even point. All right. So I'll give you one example and let's move on to the chart. Let's talk about one of the trade that I've taken yesterday. So if you switch on here, so as you can see, I got two trades. I'll talk about that second trade later on. That's basically just a quick scalp. If you see here, why did I decide that I want to short at the specific level? I did not short over here, I did not short over there. Why do I decide to short at this specific 137, 135 level? It needs to have a set of rules and a set of logic, and in fact strategy, that tells me that I can only short at that level, right? So if you start looking at the 1 hour time frame, you can see that dollar Canadian were overall in a very healthy uptrend. So we can't argue that. Why? Because we are constantly forming sequence of high highs, high lows, high highs, high lows. And in fact, up until this point, if I draw a vertical line here, everything is still bullish. Yeah, we all can agree with that. This is basically just an irrational uptrend. Why do I call it an irrational uptrend? Is basically because this entire uptrend is very overstretched. And then up until this point, this is where I find things interesting. If you look back to my previous video, I actually took a nice short position here as well for about 4R. But right now let's focus on this position. So on a high time frame, everything is pointing bullish. But at this point, this is where we start having a bit of conflict of interest, as in we start seeing market structure shift. Because market is being so overstretched towards the upside, it makes me feel like at one point we are bound to experience some sort of snapback. What is snapback? It's basically like the rubber band. When things get a little bit too overstretched, it is bound to snap back, or what we call pullback. This is exactly what happened. If you think in terms of retail mindset, here we have our highs at 137.97. So some of you can call it a level of buy stops. Why is it a level of buy stop? It's because retail traders are focusing on selling short at this level. Right? When you're selling here, your stop loss are what we call buy stops, because when things goes up, your short position gets stopped out, it triggers buy order. Yeah, you have to buy back or sell position. So it's simple as that. let's not make any confusion here. When things start moving down, that's where majority of the people, they start getting excited, right? And then what happened? Boom, we got the speed towards the upside. When you got that intention towards the upside, now retail traders start jumping onto the breakout. Now our chasing breakout gang start jumping into the market, start getting excited. And in fact, everyone wants to buy this because they think that, hey, market has been moving up so aggressively. What if price continues to run up for another 100-200 pips? That's why everyone looked onto the buy. And then what happened? Look at this candle. What is this? This is basically what I call disappointment, or what we call an imbalance candle or displacement candle, right? When things start snapping down, that's where a lot of disappointment kicks in. Why is it disappointment? Is because things are supposed to move up from the retail perspective, not the smart money, not from the big players perspective. But when things start snapping back, that's where a lot of people get caught into some panic situation. What should I do? I have a buy order here, I have a buy here. What happened? I need to get out of my position. That's why when price starts pulling back, this is where retail start closing out their position, because they're in a net loss. Everyone wants to get out at break even or small loss. When things starts pulling back, things reverse, and that's the logic behind reversal as well. If you are looking to trade, if you're always looking to trade double top, head and shoulder, all this formation, all these patterns, you need to understand the logic behind it. If you don't understand the logic behind it, you are purely just gambling the market. So how do I know this is still a seller's market? It's because we broke below structure here. When I saw that deep under 136.41, I knew that sellers are bound to come in again at some point. I didn't take any trade here. I did not take any trade there because I know if I'm looking to take any trade under here, that's from the retail perspective. They're looking short to break and retest. I'm not looking to do that. And in fact, I'm looking for a deeper pullback. Perhaps if I pull up the Fibonacci tool, go back to the 50% level retracement, or 61.8 or 62% level retracement. And when I saw that first drop, nice. That's my entry yesterday, on Thursday, sorry. I took a short on Thursday for about 4 hours from here to here. I covered my position right on point. Price pulls up, continue. So things, so the logic behind this setup starts appearing after here. So when I saw that double top, which exactly matches here, can you see that? This is what I call the origin of market structure shift. Why is it the origin? It's because anything before this can still be an uptrend, right? If I draw a vertical line here, everything before this structural break is still an uptrend. But the moment we see a structure break here, things start shooting towards the downside. Can you see that increase in volatility? Can you see that boost in momentum? That's what I'm looking for. I'm looking for price come back to this level. And that coincides with what? Our 62% retracement. See that? Nice little rejection here. Double top. Double top, there are two types of double top. There are a complete reversal double top. There are also continuation type double top. So in this case, when price starting to reject that double top, I knew that, all right, that's what I'm looking for. I get a double top here. I don't think price will ever go back, because if it goes back up, high chance it's going to continue, right? So it doesn't go back. Nice little short on Thursday. On Friday again, price starts rejecting again. So coming here, can you see that on the 5-minute chart? When I was looking at the market today, there are two levels where it acts as my point of interest. The first one is actually this high. So I'll go back to the quick reason why I think price would not go back here is purely because it formed a double top, and I believe that if price were to continue, it wouldn't pull back to the double top region, right? So that's the logic behind it. So the first point of interest is actually at this high at 137.35. But I was waiting for price to pull back there. The moment when I see this sell off, and this sell off does one thing that basically confirms that I'm looking short here, not at the top. It's right this. It's this piece of little price action. We are intending to break below previous structure. So this kind of structure, you really have to drop down to low time frame to be able to see it more clearly. Can you see this candle? This is what I call a strong imbalance candle or a breakout candle. Can you see how we just break below previous structure a little bit? That is what I'm looking for. I'm looking for an intention to move towards the downside. When I saw that intention, I know that, all right, I'm looking to short right now. You wouldn't go back there. Why? Because here we already have a break of a short-term trend. I'm not a big fan of using trend line, but sometimes it does act as an additional layer of confirmation to my entry, right? We have a break of trend line, so that break of trend line adds on another layer of confirmation, because below that trend line is what? Liquidity. Acts as a liquidity point. So I was waiting for price to pull back. Saw that. When it pulls back, I take on the trade with a limit order, stops above the high. Why is it above that? Is because I think price shouldn't go back if things are healthy. Then it starts moving into my favor. It starts moving into my favor. Then I have different target. This comes to one of the key points of this lesson as well. Don't ever have a static target, especially if you are being way too greedy. Before you set your target, I want all of you to have a practice or ask yourself a set of questions. If I were the opposite side of the market, if you're looking short, if you are short sellers, where would the buyers be spotting at? Which level specifically are they looking at? Don't have your target just because you think our price maybe will come here because that's the key support. It doesn't make any sense, because if you're looking, especially if you're looking to trade counter trend, in this case we are still consider taking counter trend because longer term we are going up. So if you're looking to trade counter trend, every single support level acts as an obstacle to my position. It is a barrier. So I would want to take off some profit to pay myself first if I feel like that level could be a barrier to my position. Right? So in this case, I have my ultimate target here. And in fact, my initial target was actually a lot lower, was actually somewhere around here. But I decided to move my target a bit higher because I feel like that is a little bit dangerous. Therefore, when I see the strong sell off, my first level of partial was actually right here. See that? So when price moved down, when it pierced through that level, I took off partial because I saw that rejection there. It proves that the level is actually an obstacle as well. Take off partial. Can you see the amount of rejection over there? Right? So I took off 30% partial, move stops to break even. So this trade is basically risk free. I secured about $1,000 to $2,000 in profit, and then I let the position to run. Then when it starts continuing towards the downside, when it pierces through that low, I again take off another 30% partial. Why do I do that? It's because this is relatively significant from the short-term perspective. Now what I'm trying to see is whether if it has the strength to break through this low. Why is it at the absolute low? It's because if price finds weakness or what we call bearish strength break through that low, it needs momentum. It will do something like this, and then I'm looking to scale back in over there. But if it doesn't break, I'm happy to take off my position, right? Because I'm not being stubborn. I'm here being a trader. I'm not here gambling the market. I need confirmation. If you don't give me the expectation, the confirmation that I want, I will close out the position. Because whether to close out a position or whether to enter a position is up to me in being accountable as a trader. I'm putting my capital at risk. Therefore, I need to make my decision quick. As a day trader, you need to make quick decision, right? Then when it starts doing a lot of rejection, bear in mind when I close 30% partial, I'm left with about half the initial size over there. And then when I saw that congestion, I decided to just close out my full position because I don't like that. When I see this kind of exhaustion pattern, I know high chance is going to attack some of these previous swing high. And I do not want to see that happen, because from a day trading perspective, this kind of pullback or congestion could cost me 3 to 4 hours. I do not want to sit here holding the position for 3 to 4 hours over uncertainty. Therefore, I chose to close out the full position for an average about 3 to 5 to 4 hours, and then look at what happened here. Price immediately run through my stop loss. If I did not scale out my position, and if I hold my position, or if I set my TB target based on emotion, this wouldn't be a 3.5 to 4 hour position. This in fact would turn out to be a negative 1 hour trade, right? So now jump back to our initial lesson here. What I'm trying to share in this video is the importance of acknowledging uncertainty, probability, and possibility in the market. We are not here being stubborn. All our goals here is to make good decisions. If you are able to stick to your discipline, stick to your plan for a long period of time, trust me, ultimately you will become a very, very good trader. Because you have a set of rules, you have a set of discipline to follow day in, day out, every day. When you go to the chart, you know what you're looking for, you know what you shouldn't be taking, you know exactly what you should be taking, you know when to be aggressive, you know when not to be aggressive, to be conservative. Therefore, it starts building up your consistency, right? So that's it for the lesson today. And I hope you learned something new. If you have any comments, always let me know in the comment section below. Trade safe, take care. If you like the video, please make sure you click the like button and subscribe to the channel. Share it to anyone else who would love to watch this. And I'll see you in the next video. Take care.